What's going on, everybody? It's May 17th, 2023, Daily Log episode number 3, volume 2. Today we're going to cover ES and the price action that unfolded. So today we finally saw some expansion out of the range that we've been kept in, which is a good sign. I'm very happy to see it. It was a lot of manipulation today that unfolded, at least in the AM session. I noted how there wasn't much news driver event, but I believe Biden was speaking, and that's the reason why we saw the volatility. It didn't say it on my Forex Factory, so I wasn't expecting that much volatility to come into the market today. You could even see pre-New York session how there was a good amount of volatility, meaning there was just a lot of movement that was happening. And I'll cover what happened in the AM session and what I was outlining in the Telegram, and basically how I disqualified it and kind of just sat out of it. Even though the model was there, we just talked about this basically the last 3 days, how the model was there, all the rules were there, everything was in place, but it just simply didn't work out. And it's just due to the conditions that we're in. And you have to expect that. You have to expect precision to be less likely. You have to expect to get it wrong. And it sucks to say that, but it's the truth. And now that we have finally cleared the buy side liquidity, and we haven't closed above this fair value gap in here, but I would likely to elect to believe we're going to see higher prices in here. I don't know if it's going to be tomorrow. Friday, we do have kind of like a something in the road with the Fed speaking, meaning that price could be held. It could be manipulated up until the point that the Fed speaks, because that typically is a large movement in price. So I'm curious to see what happens tomorrow. We formed a daily bullish order block in here after the closure above it. So we're just accumulating inside of this fair value gap in here, inside of the BISI, and then we ran out the buy side liquidity. ICT annotated yesterday how we continuously kept running out sell side liquidity, and we were leaving the buy side liquidity intact. So it was kind of like a signal that if we were to break out of the range, it was most likely going to target the buy side liquidity, coupled with NQ kind of leading the pack and ES and YM lagging behind. Now ES is starting to catch up a little bit, which is good to see. As long as NQ continues higher, I'll cover the dollar because that's the only thing I see as an issue right now with prices. The dollar is bullish as well, at least as far as what I'm looking at. So the next day or two is really going to determine what's going to happen in price, in my opinion, as far as narrative and where we should likely draw to next. So we jumped down here on the 4-hour time frame. We just had a straight up 4-hour candle. I noted how you're not missing anything. Don't feel like you're fear missing out, because in these type of conditions, you want that type of day. You want to see this. I was so excited and happy. I was at the gym and I looked at my phone and I sent you guys that Telegram, message as we're finally breaking out of the range. It's such a good sign of price, considering what we've been stuck in for over a week now. And in general, almost over a month inside of this, and hopefully we continue higher and really break out of it. That's the ultimate goal here. So don't feel like you missed out on anything. It's a good sign. Those are conditions and days that you just let play out and you let price determine where we're going to draw to next. So we jump down into the 1-hour time frame here. There's some sell side liquidity resting beneath us, but that could be left for a later point in time if we just continuously draw higher. I said we've been taking out sell side liquidity numerous times over and over and over again, even internally, and leaving all that buy side liquidity intact. So trendline phantom here for the people who trade these type of concepts. A lot of buy side liquidity was left above this untapped, and we went ahead and took that out. So if we dig down into this morning, and I'll cover, I did take a trade today and I took a loss, and I even showed the fair value gap that I was looking for. I was expecting a loss, to be honest with you. I kind of did it for the reason that I wanted to show how basically fickle these markets are. And most key important part of today for me was how I was able to negate this short setup, not trade it, not let any emotions override me, not let anything happen to me after I took that loss, and simply sat on the sidelines and let this entire day play out. And you're going to see that with full transparency. I didn't do anything else. So for me, it was a really, really good psychological day for me. even if you take a loss, there still can be good days, even if you had a losing day. For me, I always love when, even if I took a loss like today, but psychologically, I didn't FOMO into another trade. I didn't take another trade. I got off the charts immediately after I saw that this short setup was negated. Even if it was to play out, I wasn't going to take it, and just because of a few reasons that I'll cover. So make note of that in your journal when, even if you took a loss, but psychologically, you held yourself together, that's still a winning day. Okay. Those days are days that you cannot overlook. Those are days you need to be proud of yourself and congratulate yourself over, rather than beating yourself up over a loss. Watch your self-critical self, because in the book Mental Game of Trading by Jared Tindler, he talks about being very self-critical. And I didn't really notice it in my own trading for a while until he brought it up. But I'm extremely self-critical, and it can get to a point where it's almost too negative. There's a point of being positively self-critical, but if you get to the point where you're really self-critical, it's just going to cause more negatives than positives. So this morning, I annotated how before the open, I was looking at this 15-minute fair value gap that was resting inside of a discount. And I was looking at, if we take away the new week opening gaps, I was looking at the buy side liquidity here at 41.51. And I believe above here was 41.56. So those were my two targets I was looking to long into. And this is simply my model number 3 continuation pattern. And I'm watching order flow pre-market. And I'm looking at what happened overnight. So I'll drop down to a 5-minute. We took out sell side liquidity. We displaced higher, returned into a bullish breaker in here, displaced higher, respecting bullish PD arrays. Look at the bodily closures in there. Displaced higher again, dipped down into a discount, 15-minute bullish order block, displaced higher again, leaving that 15-minute bullish fair value gap. And if you extend all these down close candles, that would also be your bullish order block resting inside of a discount. So I was just looking to see if I could long into the buy side liquidity. That was my main focus. I was looking to see if I could long into there. I was expecting to take a loss. It was very minimum, less than 0.5%. And I talk about this over and over again this week, how your risk should be very minimum. Your frequency of trade should be very minimum. And I just kind of wanted to annotate how these conditions can really, really mess up a model, even though the criteria was there. So after the open, I watched price dip down into here, and I'll show my entry. I entered into here. My stop loss was underneath here. And it was the same thing as the last day. The last losses I took out before my stop loss was even hit, which is a pro. Again, I talk about pulling the pros out of all of your losses and really highlighting them and congratulating yourself over them. Because if you don't do that, it's not going to help you in any way. I was looking to target the new week opening gaps as well. And then we saw this huge displacement lower. And at this point in time, if I drop down to a 5-minute time frame, I was annotating inside of the Telegram how this was technically a 2022 model, but the conditions that we're in is so fickle that it's hard to trust. And all of this is internal buy side liquidity rates. So what I mean is this buy side liquidity that was rated, it's internal to all of this range in here, from that high basically down, let's say this low here that we've been trapped inside of. That's all internal. Internal buy side liquidity rates or internal sell side liquidity rates are less probability, because price can tag external buy side liquidity or sell side liquidity. That would be an external high. That would be an external low when you're looking at a higher time frame dealing range. All right, let me take this away just so we're clear. That would be an external high and external low. Everything residing inside of it is internal. So anytime you have internal buy side liquidity or sell side liquidity rates, I deem it lower probability. When you have a raid on external, so if you have a raid on a previous day high, a previous day low, that's, in a trending model and it's external, that's a higher probability because there's nothing outside of that that would need to be taken out. If you look at this example, just because we took out this high here, there was still buy side liquidity resting above these highs, above those highs, above those highs. So just because you have a buy side liquidity raid, you have to understand the conditions and the profile that you're in. So that's the reason, why, even though I was highlighting how we did have buy side liquidity ran, displacement lower, shift underneath the low, This would be a bearish breaker. We had two fair value gaps. We had this one resting inside of a premium. I noted how this was the only valid quote unquote entry pattern, but there's a few things that are negating me to want to short off of this. Was the dollar, I'll show it, was taking out its highs and it left relative equal lows. So to me, if the dollar wanted to go lower, I can't trust this, especially in the conditions that we're in. So if you took a loss on this, it's the same thing as happened to me this morning. It's your model is there, but in these conditions, you have to expect to take a loss because of the range that we're kept in, right? If you look at the flip side of a bullish bias, we just drop down into a discount relative from that dealing range low to that dealing range high. So from this dealing range low here to that dealing range high, if you're asking why that dealing range, if you go out to a bigger time frame, like a 15-minute or 30-minute, you can see from that dealing range low to that dealing range high, you're dropping down into a discount. But I can see that on a 5-minute. Dropping down into the new week opening gap, and then we displaced higher. So inside of all of that, you're taking out sell side liquidity, relative equal lows, and then we're displacing higher. And I believe we had bullish SMT as well with NQ and YM. So there was another supporting factor with dollar going lower, bullish SMT, you're dropping down into a discount, new day opening gap, displacing higher. It was just a lot of things stacked against it. And it was how I was able to just negate it. Even though I took a loss, only about 20 minutes or 30 minutes beforehand, I didn't let emotions take over me. I didn't let anything trigger me to get into this trade, even though the model was there. So I'm proud of myself for that. I'm happy that I was able to stay out of it. I was happy that I was able to basically show you guys how to not take a trade when even the model is there. Okay. And if you took the trade, it is what it is. You can't read too much into this right now. Now the fact that we've broken out, we can really start looking for a little bit better precision overall. After this, price just became really, really wonky. This is where I believe Biden started speaking. Something unfolded. I'm not sure, to be honest with you, because the Forex Factory didn't state anything, but I know Biden was speaking. So something did play out during this time period. But you can see a lot of manipulation. That's the reason why immediately I said I'm done for the day. I don't feel like forecasting or really reading too much into price, which it's still amazing to see the precision. We dropped down after this. So we shifted above that high, dropped back down into a discount into the new week opening gap, precision, and then displaced higher from there, which is phenomenal to see. Anybody that says these concepts don't work or they're not real, they're very, very real and they very much work. It's just the trader interpreting them. So after that, we displaced above the two new week opening gaps, old new week opening gaps. And from there, we met this old new week opening gap and we saw a little displacement lower from here. And then we just kind of hung around. And it's the reason why I was just willing to let this play out, because this was very much a large expansion for me. And at that point in time, we're running deep into PM session. We've already expanded a lot throughout the day. So I'm not expecting more of an expansion. I'm not looking to reversal this, especially I'm not trying to get in front of a train. When you have large expansions like this and you're expecting just overall bullish narrative, I'm not trying to short it. If anything, I'm only trying to long it. So in those one-sided conditions, you have to pick a side and stick with it. You can't try to short and long and short and long. It's not going to be in your favor. So took out all the buy side liquidity, closed above the bearish fair value gap in here. Now from here, I only expect upside. Now you can hear my voice, and you're going to hear, hopefully over the next few days, as long as we continue, it's going to be clear. You're going to hear throughout, even in my trades, how it's going to be easy. At least that's what my hope is we don't fall back into a range that we've been in. I hope that we can continue in a clear one-sided narrative. And when you're in that type of conditions, it's extremely easy to predict. It's basically taking money off of a tree, to be honest with you. The only thing I would just note the bullish order block in here, note the 4-hour fair value gap in here, note the 1 hour as well. So I wouldn't want to see price dip beneath this 1 hour. There's no reason to dip back down beneath any of this. If we do, then obviously we have to change gears, but that's what I'm expecting. I'm expecting more upside from ES. Let me touch on dollar real quick, and then we'll close it out. Dollar index, we displaced higher. I annotated in the Telegram this morning how overnight in London session we displaced higher, which was nice to see. 4-hour time frame, displaced above the buy side liquidity. 1-hour time frame, I mentioned this for value gap in here, how we shouldn't close beneath this if we're truly bullish. Displaced above the buy side there. I mentioned it. Buy side liquidity there as well. Took that out. 30-minute time frame, beautiful breaker, displaced higher. And let me dig into the morning session here. So I was annotating how when we were looking at that short potential model, how dollar is taking out its highs, leaving relative equal lows in here with a discount for value gap. So that's utilizing intermarket relationships and trying to basically justify or not justify a trade setup. If that trade setup was to actually be, I guess, verified, you'd want the dollar to be going higher at that moment, or at least looking to go higher, and it wasn't. So that's the reason why I was willing to let that go. You can see here, we displaced lower, turned into a fair value gap in here, and then sold off into the relative equal lows and then into that fair value gap that I annotated. So that was the dollar index today. London session was really the large expansion for the dollar and foreigns. Let me go over this. So let me just show the trade that I took. Yes, I don't read too much into this. It was just something that I wanted to show all of you how in these conditions, even though something is there, you can still get stopped out. So with spread, I didn't get the best entry. I really wanted an IOFED in here because I was still residing inside of a discount, basically right at equilibrium. And then we dumped off here. My stop loss went here. I closed out a little bit beforehand. So it is what it is. I'm not upset. It's less than 0.5%. So we're down, I think, less than 1% this week, almost 1%. Let me show this here. I'm trying to make these videos a little bit more condensed. So if you hear me kind of semi-rushing. This is the stats. So we're still up basically 0.5%. You can see here, yesterday we were at 201,877. And then today we're at 200,855. So no worries. It's the reason why I went with this prop firm is no time limits on prop firms make your life 10 times less stressful. I don't have to force setups. I don't have to worry about negating my drawdown or over leveraging. I can just take my time. I highly recommend that. If you guys are going through prop firm challenges, I would stick with one that has no time limits. I think it's kind of changing the industry right now because there's no reason that a trader should be forced to make 8 to 10% in 30 days. I think it's absolutely insane to me to make a trader do that. And these prop firms that are not changing with it, I think they'll be ran out of business at one point or another, or they're going to have to change, to be honest with you. So that's going to be it for today. Like I said, just look for tomorrow. We do have a news driver event in the morning. So let that play out. Let the open play out as well. And we'll see if we can find a setup. I'll annotate in the morning. So until tomorrow, good luck and good trading, everybody. Be safe.